Hey, folks, welcome to InTheMoneyStocks.com's verified investing trade setups and action video. My name is Gareth Soloway, Chief Market Strategist and Master Trader here. All right, first off, let's take a look at this stock on this Monday, November 4th, 2019. It's actually the S&P 500 on the SPY chart, which is, again, a tracking ETF. But what I wanted to show you here is the market obviously has gone parabolic in recent days and really the last month or so. You can see here the low pivot was around 284, and we've gone straight up to basically a high today of exactly 308, which is kind of interesting. But the last little bit of resistance, all right, the only level I can find out there is this level before you. And again, you could see it how we opened above it, but we've kind of traded back into it. I'm very curious where it closes today. Now, let me show you where this line comes from. It's the last level that I can find, all right? So once you get above all highs, which we've done, you then have to start looking for upsloping trend lines. And if you connect this former all-time high with this all-time high's exact high and extend it out, we're actually fighting that right now. So again, we opened above it. We've traded back into it. It's hard to get an exact read to the penny on this, but it looks like right around 307.50. So per the close today, I'm very curious. Do we close strongly above that level, right around that level, or below that level? And I think that'll kind of shape. Now, do have a lot of stocks that are overbought. I mean, if you just take a look at the Apple daily chart, I mean, this is an amazing. This company's now like $1.2 trillion company. And the move recently has been amazing. It did have that pullback right here going into earnings and such, but for the most part, it just zoomed higher here with a unbelievable move, and we're now hovering above 255, near 257 on it. But this is overbought. I mean, if you look at the RSI, the MACD, I mean, you could look at anything. It is now overbought. In addition, anything that any relation, and Apple does have relation to the Chinese expected, phase one trade deal, but a good one to look at for that is Caterpillar. And again, any sort of trade deal would be good for growth and building infrastructure and all that kind of stuff in China, especially. And you could see here the move up we've seen in Caterpillar on really mediocre earnings. I mean, their earnings were not good at all, to be honest, but the stock obviously is reacting to the hope that there's going to be a China deal of sorts. Now, I don't like shorting this just yet, but I am eyeing a couple levels on Caterpillar. I will reveal those right now. All right. So my first level on Caterpillar looks to be, if I remember this one correctly from calculating it out, it's right in here. So you're just coming up to kind of 150 or just below 150. I'll probably look for 150 as a pull the trigger on the short. Maybe we get it tomorrow on a 3-bar surge. So Friday was 1. Today 2, and if we can get a 3-bar surge piercing 250 tomorrow, then I would pull the trigger on that as a shortable trading opportunity. Now, there are some stocks I like on the long side, folks, all right? One of them that I've been long here for a little while, and I like it quite a bit, is NIO. So basically, the only thing I can tell you is that there aren't many stocks that are at this point undervalued per almost any metric because of the run in the market, whether it's Caterpillar, whether it's Apple, whether it's Microsoft. I mean, all these stocks, financials, JPM, Bank of America, they've all made massive runs. But there are some stocks that are still at their lows, and I love this chart pattern here. Look at the reversal candle here and then the consolidation. And then look, if you break this, I mean, you're going to go straight here and then likely to the gap fill. I have a couple downsloping trend lines here that aren't really that important at this point in time. But basically, you'd be looking at a potential move all the way back to $2.70. That's almost $1 higher on this $1.78 stock. That's a really nice opportunity there. For NIO. So keep an eye on that one. Another one I like, they just came out with good earnings this morning. The stock is a pretty thin stock. It kind of has come back in, but I actually like this quite a bit, folks. Any sort of opportunity to buy it back at the level it was prior to the earnings this morning, which would be right around 1080 or so, would be a steal of a deal. Because it's thinner, it went higher early on pretty thin volume, a little short covering, went as high as $12.38, but it's coming back in. But I like this one quite a bit. And that's, to be honest, the only area I see that's worthwhile at this point is kind of finding these forgotten China small mid-cap ones that haven't run yet, that are still at 52-week or multi-year lows. Those are good opportunities. The last sector I do like is the sector, the marijuana sector. So Tilray, for instance, just had a beautiful retrace. It's actually very close to the lows, still making a bull flag. And again, I think I've said this before, but I'll mention it again. What I really like about this is the key here is that you have to understand that in a recession, marijuana stocks and CBD stocks are still going to do well. I basically equate them to alcohol, right? So, if you look back at the Great Depression, people still drank a ton during the Great Depression. I mean, it was almost your outlet. Not necessarily a healthy outlet, but it was an outlet nonetheless. The idea here is that even if we do have a recession, these stocks are probably recession proof and they'll continue to grow. So I think even if I had to tuck something away, the Chinese stocks are good for a balance, a big move. They're smaller stocks. I don't know long term, but I do like these marijuana stocks like Tilray, CGC, ACB, stuff like that in terms of looking for that longer term safe trade kind of sort of safety if we start getting into a slower growth environment. We're obviously slowing in growth, but the question is, do we go into recession into 2020? And that's the question. But even if we do, I think these stocks are where you want to look for them. So again, you can see they've all pulled back. You can see CGC is starting to make a move. Canopy Growth today up about 50 cents. Even if you want to have more diversification, you could just go with the MJ, which is basically the marijuana ETF. I like the fact you have a higher low here. Here's your low, higher low on a pullback, starting to uptick a little bit. You won't get as big a bang for your buck out of this because it's diversified out, but you'll still get some great opportunities. So I just want to pass that along. Again, to summarize, most stocks out there are overbought, seriously overbought, extreme overbought. The Fear Greed Index I highlighted today on Twitter and in an article earlier is in the extreme greed area, so we know that there's just an abnormal amount of bullishness out there. Doesn't mean it can't go up a little bit more in terms of the markets, but we're definitely into some key levels here. The only stocks I like are kind of these beaten down stocks still, and the marijuana stocks, which are beaten down as well, but they have a good chart setup as well. All right. Bottom line is, folks, I am here. My name is Gareth Soloway. I'm the Chief Market Strategist and Master Trader here at InTheMoneyStocks.com. If you want to join my service for live swing trade alerts and live option alerts, just join Verified Investing Alerts or Verified Options Alerts, and you will get my live trades as I take them. Email, SMS alerts all go out live, all that stuff. You get entry prices, exits, stops, targets, all that stuff. Come join us here at InTheMoneyStocks.com.